Hey guys and gals, it's Logan Freeman and
Alex Olson.
with another edition of the Kansas City Multifamily Minute. Hope you guys are all getting started off to a great 2021. Last week, we talked through why Kansas City was labeled as a backbone market and continues to see increased development and investment from folks that do not live here. This week, we're going to be talking about the multifamily sector as a whole and how it weathered the storm in 2020, living up to its reputation as one of the most stable commercial real estate asset classes. The forecast for apartments in 2021 is bright. And even where things sit today, many folks are putting towards the continued rollout of vaccines and the likelihood of the new COVID-19 relief measures with the new administration and Democratic control of Congress as reasons for high hopes. Economists expect the average apartment community to remain close to fully occupied in 2021 with relatively stable rents and collections. There are also hopes that vaccines will work against the coronavirus and eventually disrupt or at least offset the recent spikes in new infections. Additionally, hopes that Congress might provide more support to people and businesses hurt by the pandemic and emergency assistance passed in December should make up for the expiration of vital programs in that second half of last year. And so one thing that Alex and I are always tracking is the National Multifamily Housing Council's rent payment tracker, which found 76.6% of apartment households made full or partial rent payments by January 6th in a survey of 11.3 million units professionally managed across the country. So that is a 1.7 percentage point off of, or 109,263 household decrease from the share who paid rent through January 6th of 2020. So that compares to a 75.4% that had paid by December 6th of 2020. And this is a quote: "With the Biden-Harris administration soon to begin, the National Multifamily Housing Council looks forward to working with them and members of Congress on further support to help struggling households and keep the nation's apartment sector stable." So as we reach the beginning of the end of the pandemic, now is the time to risk deepening the housing challenges facing the nation. So Alex and I obviously think that it's time to rethink resilience and want to look at certain location drivers in a shifting market landscape. What I mean by that is Kansas City was recently named as one of the 11 secondary markets that are positioned to thrive in the next decade. Our largest cities, many times referred to as the gateway markets, led the economic resurgence from the last recession and will always be uniquely positioned as vibrant centers of culture, talent, and innovation. Even with everything that's going on right now, that's likely to be unchanged in the long term. However, it is time to start looking at new considerations for a location strategy. And these considerations won't necessarily overlook the dense dynamic gateway markets of the last decade. Instead, they're going to highlight less heralded alternatives, which may provide their own advantages in the next decade. These considerations include some of these following factors. We got population size and density, fiscal impacts, population growth and momentum, public transit dependence, housing cost in foreclosure and foreclosure risk, university pipeline, major airport access, and climate. So if you'd like to see that full report, simply visit our market reports section or email Alex and I, and we'll send that to you directly. One of the developments that Alex and I are tracking very closely is the Kansas City Streetcar Southern Extension, which officially has landed its $174 million full funding grant agreement with the city. This locks in the remaining federal contribution to stretch the streetcar 3.5 miles south along Main Street from Union Station to the University of Missouri, Kansas City. It's also a fully $352 million project with 9 stations, a transit signal priority, and improvements to intersections and sidewalks. So needless to say, property owners are very excited about the transformation that is undergoing and going to continue to happen in Midtown. Many local developers are grabbing up properties left and right, including Mac Properties, who just recently purchased a whole section of this along Main Street, including the big US Bank building across from our brand new office. And they've already developed over 3,000 units in Midtown. So the new airport, the streetcar, all of the development and the logistic parks around the city is all very exciting for outside investors and causing many people to think seriously about investing in Kansas City. And nationally, we're starting to get a lot of press. And so we are here to help. Do believe that 2021 is going to be a huge year for Kansas City on the multifamily and commercial real estate markets. With that being said, we're always here to help bring you deal flow on a weekly basis. And so Alex and I are going to showcase some off-market properties that we think will fit your strategy. So Alex, take it away, man.
Yeah, absolutely. You know, I think the other thing that puts us on the map for some of this market information is, and I hate to say it because it sounds almost too phony, but it's true. I was here with a ULI conference way back in in January of 2020, and we all asked the question to the National ULI conference to say, hey, what would really put Kansas City even more on the map? And that was winning the Super Bowl. And we won the Super Bowl in 2020, and then this year we got to keep that going. And so we had a great victory that day. But believe it or not, when you see the shots of the city, when there's a day game or a night game and they focus on the shots of the city, everybody watches football, that also helps a lot with investors. So I guess what I'm saying is it also provides confidence in what's going on here. And so that's another thing that propels investment forward, believe it or not.
Yeah, absolutely. And I think that it's just more of a vibrant feel, young entrepreneurs, young professionals love to be in a city that has a bustling nighttime and nightlife scene, great restaurants, good sports teams. There's a lot of that to be said around, hey, you go to Kansas City, you've got all these things to do, and they just won the Super Bowl. And, hopefully we'll be able to say at the end of February, I think is when the Super Bowl is we won it again, which would be awesome. So it's just fun to be a part of that, Alex. That's a great point to be made.
Yeah. But as far as what we're here for, really to talk about the deal flow, which all funnels, all those things we talked about really produces the economic development outward into the B-, the C-class properties that really are affordable for investors. And so we have actually 3 really great deals this week. First up is a property in the historic Northeast, which I know you, Logan, you've purchased several properties up there and like the submarket. We have another listing actually up there. It's an on-market deal, but it's our listing for 12 units. But this is 21 units. The building had been completely remodeled, gutted, everything new in it, new kitchens, new bath, new systems. And it's right next to one of the tallest buildings out there. I don't know what it's called, but it's in a developing neighborhood of the historic Northeast, and that's at a great price. And you're also got guaranteed income on it because, again, it's on restart with already negotiated rates for the 2021 rates. And so that's a cash flowing property that, as you get to market rent in, let's say, 3-5 years down the road, or maybe even less, it's going to be appreciate even faster than some of the other markets. So that's number one.
Yeah, I think that the historic Northeast has to be on people's radars. We're going to be showcasing a property here pretty soon that has sold over $100,000 a unit over there, and continued development across the board in historic Northeast. I mean, not just around the college, the University of Medical and Biosciences, but you've got it even farther east, closer to the highways happening. And so many folks are really grabbing up properties, and myself included, in that submarket, and so that is definitely one to be able to grab cash flow, but also get a little bit of appreciation in Kansas City. It's definitely one of those submarkets that you can do both in.
Yeah, and also I'll just kind of make a quick side note. I think and some of our property managers might disagree with this a little bit, but that you should be able to get a reduced property management fee if you're fully on Restart, because what happens there is Restart cuts a one-time a month check to the property owner or to the property management company. And so the property management company doesn't have to collect rent from, 20 plus tenants. So you're getting just one check. And so your property management fee should be a little bit lower. And again, you got guaranteed income. You don't have to worry about vacancy, all of those kind of things. So it's a really good opportunity for somebody to come in to get into an emerging market at not a whole lot of risk. And then the second property is another area that you've bought in quite a bit, and that's in Independence. Now, Independence is a large town. Don't get me wrong. There's over 100,000 people in it. There's all different asset classes in Independence. We have neighborhood retail shopping centers that do well. However, this particular asset is 35 units, and they're all, decent size units. You got some 2-bed, some 1-bedrooms in there. It needs, just your normal value add applied to it. And it's at a great price. It's not one of these that's, super overpriced where they're asking $100,000 a unit kind of thing. So, and it's within the price range of a lot of our buyers. So we have a lot of buyers in the $1.5 to $3 million range. This fits well in that. And, it's also in a good location of Independence. It's not in the far west, we'll just say. It's more located in the northeast side of Independence.
Well, I think everybody knows how I feel about Independence, owning close to 600 units in that submarket, and, a couple assets, right across the street here. I think that there's a lot to be said about being close to downtown, but also having the opportunity to get good schools. And that's what people are looking for in these properties is the school districts, right? And so that's the perfect opportunity to capitalize on the cash flowing play here, and hopefully some tenants that aren't going to turn over as much because they're staying there for the school districts.
Yeah. And then the final property is a relatively, it's relatively stable. It's got a very high occupancy. It's 215 units. So it's a good sized property. And again, it's stable. It's got some potential rent upside. The ownership group actually did a test run on, of course, it's only one unit, but they're able to increase rents over $200 a unit. And, it's in a great location of Kansas City proper, close to Waldo and close to the research hospital, close to the zoo. So it's in that corridor of Kansas City that has seen some growth, but it's not like, $100,000 a unit kind of place like we see in some of the other parts. So it's affordable. It's a very nice complex. It should be relatively low maintenance considering, and also has some longer term tenants going in there. So that one is, again, 215 units, and you should definitely scope that one out if you're looking for the 100 unit plus type of asset.
Yeah, between 435 and north to 75th Street, going from east from Holmes west to State Line, is just it's a hotbed for multifamily. And there's no issues with leasing over there. It's a great location. You get downtown quick. You get to Brookside, the Plaza, Waldo, and then you can get out to 435 and get to all the major highway access that you need. So incredible opportunity here. These properties don't trade very often. When they do trade, usually they're scooped up really quickly. So very excited about the opportunity to present that property as well. Okay, so we've got 3 new opportunities here, guys. You know what to do. If you haven't filled out the buyer intake form, get on over to the Buyer's Representation Success System, fill out that form, schedule a call with Alex and I. We're out there hustling, finding properties, making sure to evaluate them the right way, and giving you the data that you need to make informed investment decisions. Alex, you have any parting words for the folks?
No, let's get it, man. I mean, this is 2021. This isn't 2020. It's time to continue to think positive and don't let it slip by.
All right. Well, until next time, we'll see you guys later. Thanks, Alex.